Good afternoon, ladies and gentlemen. My name is William H. Thompson, CPA, MBA, and I am the founder of RE Accounting and Tax Professionals. We help real estate investors maximize return on investment through expert tax strategies, while at the same time helping them to build and sustain a legacy. Welcome to Free Information Friday. Today I'm going to discuss the topics in real estate that you don't hear much about, why real estate is valuable to invest in. But first, let's cover two quick topics why everybody talks about investing in real estate. The first one is being able to qualify as a real estate professional. Now, I'm not going to go into the details here, but if you can qualify as a real estate professional, you can shelter your non-passive income, which is your W-2 income, by taking and utilizing write-offs that have been created from your rental activities. The second item that most real estate investors get all hyped up about is the short-term rental strategy. And again, I'm not going to discuss the particulars here, but the short-term rental loophole strategy will again allow you to reduce your non-passive income by any losses generated by your rental activities. So they're the two, if you will, more sexy things that real estate investors have to get in there for. But I wanted to point out three things that aren't as sexy but still make real estate a very viable option. Number one, you can actually shelter your rental income by utilizing depreciation and reduce your effective tax rate. You won't be able to utilize any losses that are created by the depreciation, but you can shelter your rental income. Now, what do I mean by that? Let's take an example. Let's say that you made $350,000 of taxable income in 1 year, and none of that was related to real estate. Do the tax calculation on that, and you'll find that your effective tax rate is 20.1. Now let's assume you have that same $350,000 of taxable income, except $50,000 of that is rental income, and that is that is offset by depreciation. Now instead of taxable income of $350,000, you have taxable income of $300,000. That jumps your effective tax rate down to 19.6. Now let's take it one step further. Let's assume that of that $350,000, you were able to offset $100,000 of it by depreciation. Now all of a sudden, your taxable income is down to $250,000. And if you calculate the tax on that, your marginal tax rate actually dropped to 18.75. And this was all done without without getting any write-offs to reduce taxable income. It simply sheltered your rental income. So I hope you can see that one aspect of investing in real estate is very beneficial, simply by allowing depreciation to offset rental income. Not creating a loss, but offsetting it to the point where it at least zeroes out. The second aspect that is not often talked about when you purchase real estate is you can actually, after you've been a seasoned investor for a couple years, and your property has gone up in value, you're actually able to tap the equity into the property. So let's say you bought a property for $200,000, and in 5 years it grew to $350,000. Well, you have equity into it that was brought about by market appreciation, but you also have equity by the virtue of paying down your debt. So there's equity in there that you can actually tap into. Now, when you do tap into that equity and take a loan against the equity, let's say you get $100,000 cash. that $100,000 cash is not taxable. And you can utilize that cash to continue to scale your portfolio. So I want you to see how powerful, again, investing in real estate is without taking a single loss deduction. And the last piece of why I like to invest in real estate is for the ability to defer the gain when you actually sell it. For example, let's say that you bought a property for $500,000 and in 5 years it grew to $650,000. You've got $150,000 of gain in there, simplistically speaking. So you say to yourself, I don't really want to sell it because I'm going to get hammered with capital gains and depreciation recapture. Well, here's the good news. Another benefit of investing in real estate is you can use a Section 1031 to defer the gain. What does that mean? A Section 1031 allows you to sell your property and invest in another property without having to pay the capital gain or the depreciation recapture. The only caveat, well, there's actually two. You have to identify a replacement property within 45 days, and you have to close within 180 days. So the whole point of this conversation was to show you that even if you can't qualify for real estate professional status or the short-term rental loophole, you can still derive many benefits by virtue of investing in real estate. So I hope this section or this segment of Free Information Friday was helpful to you. And remember, if you're a real estate investor who wants to maximize return on investment through expert tax strategies, book a call with our firm. And remember, only you can create your empire, but we are here to help every step of the way. Thank you, and I wish you much success on your real estate journey.